Welcome, everyone. My name is Patty Dorn. I'm with the Consumer Education and Advocacy Unit of the Maryland Insurance Administration. I'm going to be talking to you today about disability income insurance. This is short-term and long-term policies. This is a relatively short presentation. I'm going to do a Q&A session at the end. So I do encourage you, as you think of questions throughout the presentation, go ahead and put them in the chat. And then I will address those questions at the end of the presentation. With that, I am going to turn my camera off and get started. So again, disability income insurance, this is going to be short-term and long-term policies. I need to inform you that this presentation does not provide legal advice, and you should discuss specific questions with a trusted financial advisor or insurance producer. Next slide, please. So what is the Maryland Insurance Administration? Why is myself a representative of the Maryland Insurance Administration here talking to you about short-term and long-term disability insurance today? So we are the state agency that regulates insurance in Maryland. What that means is we license the insurers, so those insurance companies and other entities selling insurance, and the insurance producers, those are your agents and brokers. We license them to do business in Maryland. We examine their business practices to ensure that they are complying with Maryland state laws, any federal laws that they need to comply with. We monitor the solvency of insurers. And what that means is we're making sure that those entities that are selling insurance in Maryland have the money to pay your claims. We review and reapprove insurance policy forms, so the policies that are issued to you, and we review insurance rates to ensure that the rates charged are not inadequate. Insurance companies need to collect enough money to pay claims going forward, but that they're also not excessive or unfairly discriminatory. As well, we investigate consumer and provider complaints and allegations of insurance fraud. If you have a complaint against an insurance company, an agent, or a broker, you can file those complaints with the Maryland Insurance Administration, as well allegations of insurance fraud. And with allegations of insurance fraud, you can remain anonymous. At the bottom, there's a link. I'm not going to be showing any videos today, but I do want to bring it to your attention that we have a repository of videos about different kinds of insurance. We try to make it as easy as possible. Short videos, easy to understand videos. We have probably over 100 of those videos in our YouTube repository, which you can find by following that link, or you can find us on YouTube looking up Maryland Insurance Administration. Next slide. So let's get started talking about disability income insurance. So for most adult Marylanders, the income from our jobs is critical to maintaining our standard of living. We use our income from our work to pay our rent, mortgage, utilities, groceries, auto expenses, savings, as well as many other expenses, as you all know. So short-term and long-term disability insurance offers protection for lost wages in many situations when you get sick or you're injured and you cannot work. While most disability insurance policies will not cover 100% of your lost income, so most don't cover all of your income, it can provide some help with your expenses while you are unable to work. Next slide. So what is a disability? Many policies define disability/disabled as an employee is disabled if, because of injury or sickness, he or she is unable to perform the material duties of his or her regular occupation, or solely due to injury or sickness, he or she is unable to earn more than 80% of his or her income. So unable to perform the material duties of the regular occupation, or unable to earn 80% of that income. After disability benefits have been payable for at least 12 months, he or she is unable to perform the material duties of any occupation for which he or she may be reasonably qualified based on education, training, or experience, or solely due to injury or sickness, he or she is unable to earn more than 80% of his or her income. So I know that this is a lot, it's a lot of language, but it's staying in that first 12 months, your regular occupation. But then after 12 months, in many cases, and the language is not exactly the same in every policy, I'm going to emphasize multiple times during this presentation that you need to read the language in your policy or in the policies that you're interested in purchasing. This is just common language. So after the benefits have been paid for 12 months, then he or she is unable to perform the material duties of any occupation for which he or she may reasonably become qualified for based on the education, training, and experience already obtained. Next slide. Many people think of severe injuries or catastrophic health conditions as the leading cause of disabilities, but not true. Disabilities are more commonly the result of less severe injuries and common conditions, such as heart disease, back pain, arthritis, mental health conditions, and digestive disorders. Next slide. All right, so what if I have a pre-existing condition? Can I still purchase disability insurance? So a pre-existing condition is a medical issue that you had before starting the coverage. You might be able to purchase disability insurance without paying higher premium rates if you have a pre-existing condition. But in most cases, the insurance company will exclude or limit coverage for illness or injury caused by your pre-existing condition. This is important. Disability policies are designed to protect you from future risks, not existing medical conditions. And so, this is a question that I get in my inbox several times a week. Like, I've gone through a surgery and I cannot work. I broke my leg and I cannot work. Can you help me find a disability policy? And so this is a new slide that's been added into this presentation to help answer that question, right? So you wouldn't, after a car accident, if you didn't have insurance, you can't just go buy auto insurance to cover the accident that already happened. If you had a house fire, you can't buy the homeowner's insurance afterwards to cover the house fire that already happened. The same with disability. Long-term and short-term disability policies are designed to protect you from future risks, not pre-existing medical conditions. Next slide. So same questions at the top. If a pre-existing condition is discovered during the underwriting process, the insurer will use a signed waiver rider to exclude or limit all benefits for disability caused by the condition. If a pre-existing condition is not revealed in the application process, the policy will be issued without a waiver rider. However, most policies will still include a pre-existing condition limitation that states that a disability that begins in the first 2 years and was caused by a pre-existing condition will be excluded from coverage. A covered disability that begins after 2 years will be covered without limitation if a waiver rider was not signed. I know that's a lot, and I can absolutely understand if you need to review this language. And I do want to say, if you would like a PDF of these slides, I will put my email address in the chat and you can shoot me an email address and I'll send you a PDF of the slides. Next slide, please. One second, I'm going to put in my address if anybody wants to grab it. Also, questions going forward, I encourage you to email me. So what about workers' compensation? Where does workers' compensation fit into this big picture of disability insurance? Most Maryland workers do understand that if they're injured on the job or experience an illness caused by their job, that they may be covered for lost wages by workers' compensation. Workers' comp coverage provides coverage when the illness or injury happened at work or was a result of work activities. However, this is the reality. Most disabilities do not occur at work, and consequently, they're not covered by workers' compensation. In this presentation is a link if you want to find out more details about workers' compensation in Maryland. Next slide. So short-term and long-term disability insurance provides partial income replacement if you get too sick or injured to work. Most disability insurance policies pay you a percentage of your income if you get sick with a serious illness or experience an injury that prevents you from doing your job. Some cover you in the short term, immediately after an incident, while others pay you if your injury lasts for an extended period. So usually the short-term disability policies cover you for up to 6 months, and long-term disability policies begin after you have been disabled for 6 months or more. And let me just stress the usually here, because you could have a short-term disability policy that lasts for 12 months, a long-term disability policy that kicks in at 12 months. Usually just means the majority. Again, these policies can vary greatly from policy to policy. You need to understand what you're purchasing. You do need to read your policy, and make sure that you really do understand if you're purchasing both, when does the short term kick in? When does it end? When would long term start? How long does the long term stay in effect? Make sure that you thoroughly understand the answers to all those questions, because if you have questions about a specific policy, you know, in this presentation, I wouldn't be able to answer it because there is a lot of variance from policy to policy. Next slide, please. In general, a short-term disability insurance policy helps you immediately after an incident or illness. And the long-term policy provides the financial protection that can last for years. However, like I said, and I'm sorry to keep repeating myself, but the disability insurance benefit plans can vary widely. You must continue to meet the definition of disabled as outlined in your policy. So in order to keep receiving benefits in probably all disability policies, you must continue to meet that definition of disabled. Most policies will require periodic updates from your providers to support that you are still disabled. Next slide, please. So some common terms. You're getting to know your policy, you're working with your agent or your broker. It's helpful to know some common terms. So extent of disability. Some policies may require you to be totally disabled. Others may pay a partial amount for a partial disability. Disability is covered. This is going to be a list of the accidents or illnesses covered by the specific policy that you purchase. And the amount of benefits is generally a percentage of the income you earn. So make sure that you understand how other disability payments like Social Security disability can affect this amount. Next slide. These policies typically have a waiting period that's called an elimination period. The waiver of premium is what exempts you from paying premiums after you've been disabled. So while you're on claim, in most cases, you wouldn't be paying the premium. That's called the waiver of premium. And when they say own occupation or any occupation, that's how an insurer determines whether benefits are payable based on the job duties you can perform or if you can perform any work. Own occupation, your job. Any occupation, any work. Next slide. So just a quick emphasis on short-term disability. So just short-term by itself. This is insurance that replaces a portion of the employee's income in the event of a disability. Important statistic, each year approximately 5% of American workers experience a short-term disability. The short-term disability policies generally pay benefits for a short period of time, 3 months, 6 months, 1 year, after a brief waiting period. For the most part, that elimination period is usually 2 weeks. Next slide. Which is on the next slide. Benefit payments typically start within 2 weeks of a qualifying illness or injury. So again, the elimination period is generally 2 weeks. It doesn't have to be 2 weeks. It could be 1 week. It could be 4 weeks. Understand your policy. Short-term disability insurance usually replaces 40 to 70% of a policyholder's income. So it's really important to understand that, right? You're not going to purchase one of these policies that replaces all of your income. So if you're planning, if you're doing your financial planning and you're thinking about, I need to replace all of my income, that's where, you have to consider your own savings component of this as well. You're going to be looking at policies that replace between 40 and 70% of your income. And so, focus in on that. If you want it the highest percentage possible, you might be looking at higher insurance rates as well, but just understand what you're purchasing and understand what percentage of your income this policy is going to replace. Next slide, please. In order to qualify for disability benefits from an employer, an insurance company, or the government, a beneficiary's disability must meet the definition of disability as defined in their policy. So as we talked about earlier in this presentation, a common definition of disabled that is common in the short and long-term disability policies. That does not mean that that is the same definition that Social Security disability insurance uses, et cetera. That's specific to the short-term and long-term policies that we see here in Maryland. So you must meet the definition and it must be confirmed by a physician. Short-term disability policies can be expensive to purchase as an individual policy. You can do it, they're out there, you can purchase it. But group plans are typically less expensive than individual plans. And I say this because many employers offer short-term disability group plans. Some employers might offer it to you with no premium out of your own pocket. Some may require premium for you to participate, but it's just to encourage you. If that is offered through your employer, you might want to take advantage of it because you're likely to see cheaper rates than you're going to receive if you go out and purchase your own policy. Many employers offer that policy as company paid or partially paid. So it's just an important thing. If you don't know anything about it, you might be surprised. Talk to your employer about it. Next slide. To trigger your benefits from a short-term disability insurance policy, you generally submit a claim to your insurer that includes information about your condition from your healthcare provider. Under the terms of most policies, the benefits are paid directly to you without limitation on how you can use that money, just like your income. While employers can qualify for time off to care for a sick relative under the Family and Medical Leave Act, FMLA, important to understand that short-term disability policies will not provide benefits if the employee is not the one with the injury or illness. Next slide. All right, just a quick focus on long-term disability insurance. The long-term policies generally kick in after at least 6 months of meeting the policy definition of disabled. Okay, so like I said, it might be 6 months, it might be 12 months, important to understand. You might be somebody who doesn't have short-term disability and you only have long-term disability. And what that means in essence is that you are covering those lost wages yourself until this long-term policy kicks in, be it at 12 months, a year. Again, everyone makes their own determination when purchasing insurance and thinking about the big picture of their finances. What makes sense to you? Oftentimes it makes sense to have short and long. Maybe some people just want the long term. Again, you speak to a financial advisor and understand what makes sense for your financial situation. Many employers offer a group long-term disability insurance policy as a job benefit. So just like I mentioned under short-term, that might be where you're going to get the best rate. Many of these policies work in tandem with short-term disability. In many cases, short-term disability ends, long-term disability benefits begin. I mean, that's a perfect situation, right? One goes for 6 months and then the other picks up after 6 months. Without a short-term disability policy in place, there may be a 3 to 6 month waiting period. So that's just saying if you just have long-term, no short-term, you could have a waiting period of a decent amount of time where you don't receive benefits based on when the long-term disability policy begins. Next slide. So the long-term disability insurance policies generally pay benefits for a duration of time longer than a year. All right. So in general, longer than a year, as long as you continue to meet the definition of disability. Some of the benefits continue to a certain age. Again, like I said a couple times earlier in the presentation, these policies are written in many different ways. Make sure that you understand your policy. So when you're looking at a long-term disability policy, how long is it going to pay? A year, 2 years, 5 years, 10 years, until you're 65? Some long-term disability benefits continue to a certain age, such as 65. It could be 60, it could be 70. And some benefits, they pay for a defined period of time, such as 5 or 10 years, and some continue as long as you meet the insurer's definition of disability. So are you likely to pay more for one of these policies that would say continue for as long as you met the insurer's definition of disability? Probably. Again, this is all part of the big financial picture of your life. And, where does this fit in, and how long do you see yourself needing those benefits? The long-term disability plans typically cover 60 to 80% of lost wages. So they're typically going to cover a little bit more than the short-term disability plans cover as a percentage. Next slide. Qualifying for the benefits can be different than with a short-term disability policy. With a short-term disability policy, the benefits are generally awarded when the policyholder is unable to do their job. Sometimes the long-term disability benefits are awarded only if an employee is unable to do any job. So make sure that the language in the policy is what you're looking for. It's important to read and understand the policy, which I know I've already said 10 times. In most cases, if and when an employee or policyholder qualifies for another form of income replacement, such as Social Security disability, the long-term disability policy may request reimbursement for benefits paid. So if the long-term disability policy was paying you, and then you were awarded SSDI benefits, and they back paid you, let's say they said, okay, 12 months back, then the long-term disability policy might say, hey, we paid you that money as well, and we want that portion of it back. It could be that the long-term disability, it could be that you're getting $1,400 a month from SSDI, and your long-term disability insurance policy is paying you $2,000 a month. So maybe there's that $600 gap, and you could, potentially be being paid from both entities, depending on what is being paid out. Next slide. So where does SSDI fit in? This is a federal program for individuals who suffer from disabilities that prevent them from working for at least 1 year. If you qualify, the income provided currently averages about $14,000 a year. Being awarded SSDI benefits can take months or years. It's important to understand what your own benefits would be if you qualified for the program, and how any disability policy you own or are considering purchasing works if you are awarded SSDI benefits. So you have a long-term disability policy, it's going to pay you out as long as you meet the definition of disability. You really need to understand before you apply for SSDI how that is going to affect your long-term disability benefits. So work with an agent, work with somebody from the insurance company, work with a financial planner. Make sure that you understand how the SSDI award that you may or may not get is going to affect your long-term disability benefits. And there's information for SSDI on this slide as well. Next slide. So disability policies at a minimum will help you bridge that gap between work and qualifying for SSDI benefits. And so maybe that's what you're thinking. You're thinking short-term, and then, a shorter long-term disability policy, because you're thinking, well, if I am disabled, I'm going to apply for Social Security disability insurance and go for it from there. Everyone has a different plan. Talk to a financial advisor if you're not, confident that you understand all the financial variables of your life. Next slide. In conclusion, we generally cannot anticipate if or when we'll be diagnosed with an illness or an injury that leaves us unable to work at our jobs. It's important to have a plan in place for what you will do if you cannot work, and short-term and long-term disability insurance is often an important part of that plan. Some resources. We have the Division of Rehab Services here, Employed Individuals with Disability, the Developmental Disabilities Administration. We have Workers' Comp Commission, SSA, it's in 2 different places in this presentation, and the American Jobs Centers, just as resources in the back of this. If you want a PDF of this presentation, shoot me an email and I'll send one over to you later today. Next slide. I think my next slide, this is just our general contact information. If you want to file a complaint, you have any questions, you can always reach out to us. I put my email in the chat, grab that. It's easy, patricia.dorn@maryland.gov. And then the next slide, I believe, is for questions, which I don't see any in the chat. But I'm going to give everybody a minute. If you do have questions, go ahead and feel free to put those in the chat. Otherwise, I just want to say thanks for being here today, and I hope that you did learn something. And if you want to shoot me an email for those slides, I encourage you to do so. I think Joyce is going to put some information in the chat regarding signing up for alerts from us going forward. Chat screen disappeared. There it is. So she said you sign up to receive information about future presentations and in-person events from us. And if you don't want to ask your questions in the chat, you can send them to me via email as well. This isn't your only opportunity. If you think of a question tomorrow or down the line, please, I encourage you to send me an email. Yep, I'll put it in again. Happy to do so. It's patricia.dorn@maryland.gov. Well, I don't see any questions, so I'm going to say thanks for attending. Yeah, thanks, Julie. And I don't know if this, if anyone has a need to have a better understanding of the Medicare supplement in Maryland. I'll be doing that presentation at noon tomorrow. You can find that information on Eventbrite. Medicare supplement in Maryland. It's a 75-minute presentation. So it's really aimed at those on Medicare or people who are transitioning onto Medicare who are interested in the Medicare supplement and want to get more information about the Medicare supplement. Thanks, Joyce. And Joyce put the link in. All right, thanks everybody. I hope you have a great rest of your day and look forward to seeing you at another Maryland Insurance Administration presentation in the future. Have a great day, everybody.